What's up, guys? Welcome back. We are now on our next video, and what we are going to be speaking about in this video is who trades the forex market. I know the previous video was a little bit boring, but guys, this is the knowledge you need. This is what you want to know before knowing whether you're coming into these markets strong. Alright, so let's start this session here, and we're gonna go from here. Alright, so welcome back to Free Forex Basics with Matt. Thank you all for being here. Thank you for watching this video. If you guys have not watched my previous videos, I really suggest that you start from the beginning again. It's a very good idea. I'm going to teach you A to Z about Forex. Okay, so in this video, so that we don't go hop on too long, in this video we are going to speak about who trades the Forex market. Okay, it's quite a simple and easy answer, because to be honest with you, when you Google it, and something I've learned over the years, who trades the Forex market, it's pretty simple. You have the super banks, large commercial companies, governments and central banks, and then of course the speculators, which are the retail traders, which is us. The millions and millions of people sitting at home, sitting in their offices trading, are the retail traders. We are the smallest bunch that trade, because of obviously the quantity of money that we put in the market compared to super banks, large commercial companies, governments and central banks, and then us. So let's move forward on to the next step, super banks. Okay, so with regards to super banks, since the forex market is decentralized, it's the largest banks in the world that determine the exchange rates. So the largest banks in the world basically determine exchange rates based on the supply and demand for currencies. So based on what supply is needed and what demand there is for certain currencies. They are generally the ones that make the bid slash ask spread that we all love or hate. These large banks, collectively known as the interbank market, take on an insane amount of forex transactions each day for both their customers and themselves. They are known as what you'll find on Google as flow monsters. For these flow monsters, the name of the game is volume and capturing their share of the trading flow of currencies. So a couple of these flow monsters include Citibank, JP Morgan, UBS, Barclays, Deutsche Bank, Goldman Sachs, HSBC, and the Bank of America. Now guys, I mean, just reading those examples, you guys know that why they're called super banks. So next we have large commercial companies. So companies do take part in the foreign exchange market for the purpose of doing business. So for instance, Apple must first exchange its US dollar for the Japanese yen when purchasing electronic parts from Japan for their products. Since the volume that they trade is much smaller than those in the interbank market, this type of market player typically deals with commercial banks for their transactions. So Apple has, for instance, if it's HSBC, they obviously have someone in the HSBC that deals with their account, and they obviously try and get the best exchange rate possible at the time. But that in essence means that Apple deals in the foreign exchange market, Forex. Then you have mergers and acquisitions, M&As, between large companies can also create currency exchange rate fluctuations. So in international cross-border mergers and acquisitions, a lot of currency conversations happen that could move prices around. And when we talk about this, we talk about monstrous companies that basically, when they're in negotiations with a merger and acquisition of a business, and it's between, say, a huge American corporation and a Chinese corporation, this tends to fluctuate the price around in the market. I'm sure you guys understand. It's pretty simple. Then you have governments and central banks, such as the European Central Bank, the Bank of England. Now, the Bank of England, let me tell you, when you trade the British pound and the Japanese yen, when the Bank of England speaks, you get good price movement. And the Federal Reserve are regularly involved in the Forex market too. Just like companies, national governments participate in the Forex market for their operations, international trade payments, and handling their foreign exchange reserves. Okay, meanwhile, central banks affect the Forex market when they adjust interest rate to control inflation. So, in other words, the central bank will affect the market, the Forex market, when they basically there's an interest rate hike or interest rate adjustment. The market goes absolutely crazy, and these are good opportunities for trading. Um, Obviously, when your risk is managed, but something you can learn later on. By doing this, they can affect the currency valuation. There are also instances when central banks intervene, either directly or verbally, in the forex market when they want to realign exchange rates. It's like I mentioned before, the Bank of England, when they speak, they actually move the market quite a lot. It's very, very cool. It's very interesting. It's amazing to see. It's amazing to see when they speak how the price just moves around. It's crazy, but it's something that you'll learn later on, and how it affects your trading. And you will find this in news, which is on news sites, which is fantastic. So sometimes central banks think that their currency is priced too high or too low, so they start massive sell or buy operations to alter exchange rates. Yes, you heard that correctly. Okay, then you get this what they call the speculators. What we call ourselves retail traders. We are retail traders. So I'm going to read this, but I'm going to explain it in a much better, easier manner after. So currency speculation is the act of buying and holding foreign currency in the hopes of selling that currency at a higher exchange rate in the future. Okay, this in contrast to those who buy currencies to finance a foreign investment or to pay for imported products or services. So in it to win it kind of deal, which I'll explain now. This is probably the mantra of the speculators, of retail traders. Speculation in the forex market involves the buying and selling of currencies with the view of making a profit. Speculators are focused on price fluctuations, which of course we are. We are focused on price movement. When a price moves past an area and it's cleared an area and you take a buy in the anticipation of something you've seen over and over again for price to keep going up, you go into the trade. When price goes up, which is a fluctuation, you then close your trade off and you're in profits. It's called speculation because of the uncertainty involved, since no one can know for sure whether a currency pair's price will go up or down. So traders assess the likelihood of either scenario before placing a trade. Some have fat pockets, some roll thin, but all of them engage in the forex simply to make bucket loads of cash. Now, this is taken directly from Google. And what this is saying is, us as retail traders, we don't know where price is going to go. But when you learn a currency pair, you learn its movements and you see it every day over and over again. And when price reaches certain areas, certain levels, certain prices, and everything in between, if it's something you've seen over and over again, price is moving up, it's called price action, we would then know that price will continue to move, therefore we would buy and here's where it gets tricky is we're gonna buy and in the hopes of price continuing up to then close the trade, or vice versa. If price is coming down, and we've seen it happen over and over again, we would execute a sell, and then when price moves to where you want it to move, or where you anticipate, well, they say speculate, it's anticipation, and your anticipation is something that you've seen over and over again, therefore the odds are with you. And that's why I don't really like calling us speculators. I don't think we're speculators. I think we, as retail traders, especially those that have been in the market long enough, we are not speculators. We're retail traders, and that's something that you should learn and you should know. So when you look at as a retail trader, and you learn everything about Forex, and you know what's going on, you know the ins and outs and everything like that, it's not gambling. It's a calculated risk of something that you've seen in the market over and over again. So guys, I'm just going to go back here. So who trades the Forex market? I've explained to you guys the super banks, the large commercial companies, governments and central banks, retail traders, not speculators. But when you Google it, that's who we are, and that's what they consider us. And I hope you guys have enjoyed this video, and let's wait for the next one and see what's up next. Thanks guys.